What's up, guys? According to your request, I'm going to be showing you how to catch a quality trade, how to catch a trade. Now, first of all, I will tell you the combination of the strategy I use. I use Fibonacci retracement and Fibonacci extension, but both are Fibonacci strategy. Secondly, I use Vermonized order block for my proper confirmation. The order block, the essence of the order block, the general knowledge about order block is where big traders take their trade. So if market come back to that place, the market will react and it will keep on, it will push to the direction either upward or downward. Then thirdly, I use moving average. So that this video will not be too long, as I'm doing my analysis now, I'm going to be showing you. So now let's analyze what is going to happen on Monday from 4 hours time frame. But first of all, I'm going to show you guys how to use Fibonacci strategy, analyzing what has happened in the market for the past 2 weeks, and we are going to relate it for the to the current stage that we are, and what is going to happen on Monday, and how you can possibly take a trade using this strategy I'm going to explain now. First of all, I do my analysis from 4 hours time frame. So I use 4 hours to look at for the move to the direction of the market. Then I use 1 hour to plot out my zones. Then I use 15 minutes and 5 minutes for execution. So that is how I trade. Now, this is 4 hours time frame. This is 4 hours time frame. So as I'm doing my analysis now, I'm going to turn on the two indicators that I'm using. One is for confirmation, the other one is to look at for my swing low and my swing high. I don't use it apart from that. All right, so now first of all, let's look at for my swing low in this 4 hours time frame to know how I'm going to place my Fibonacci so that I will not be wrong. Now let's on this market structure indicator. You see, the reason why I use this market structure indicator is to plot out my lower low and my higher high. Now, if you are drawing your Fibonacci, you will have to draw your Fibonacci retracement from the higher low, from the higher high, from the lower low to the higher high of the trend. From the lower low to the higher high of the trend. That is how to draw a Fibonacci. Now, what happened here that made market to come down to this place? I'm going to draw Fibonacci retracement to show you why market will react at this place and start pushing upward. Now here, see here, this place now, see this blue thing where I'm going to place this blue thing. This is our lower low. Check this right thing below. This is our lower low. Then up here is the higher high. So you are going to place your retracement, Fibonacci retracement, draw your Fibonacci retracement from the lower low to the higher high. Then it will give you the zones where market will react to. Now, this is 4 hours. Now, let's draw the Fibonacci retracement. After this, I'm going to show you the settings that you're going to make in your Fibonacci retracement. Now, this is Fibonacci retracement. I just draw it now. Let me turn off this market structure indicator. Now, I just draw my Fibonacci retracement on 4 hours time frame. Drawing it on 4 hours time frame, you see that we have 78.8.60% zone, 61.80, 50%, 38.20, 23.60% zone. When market started pulling down that day, market got to this 38%, 38.20%, and market reacted at this place and started pushing upward. If the market passed this 38%, then come down to this 38 to this 50%, and you see something around wait, let me and market comes somewhere here, react. Say like market comes somewhere here, react, like just like as market came here and react, just like as market came this place and react. Say market came down to 50% zone somewhere here, react and start pushing upward. You know that it reverse from the zone, because from here, for example, from this 38% zone, from here, from the bottom till the up of 50% is 38% zone. Then from the bottom of 50% to the top of 61% is 50% zone. Then from the bottom of 60 to the on top of 78% zone is 61.80% zone. That is how it works. Now market came down here and started reacting, started pushing upward. Now since market has started pushing upward, now we have to use 1 hour to look out for a possible trade as a daily trader, because here you cannot trade this one as a daily trader, because why? It looks small in your eye, but in smaller time frame is a very large movement. Now let's go to 1 hour, switching to 1 hour time frame. Yeah, switching to 1 hour time frame. I will delete this. Then switching to 1 hour time frame. You see the movement now is now loud. It is now large. It's not large. So now market, this is, remember this place now is 38% in 4 hours time frame. So market has started pushing from here to upward. So market started reacting and started pushing upward from here. So as market started pushing upward from here, what you are going to do now is to draw your Fibonacci extension to know where market is likely going to end, where the trend is going to end. React that place, push down a little bit for a possible continuation. Now you on the market structure again to identify your swing low and your swing high. Now looking at here, see this button here is our lower low in 1 hour time frame. Is our lower low in 1 hour time frame. See here, this red place now is our lower low in 1 hour time frame. In 1 hour time frame. So at this point now, here is the higher high in 1 hour time frame. So at this point now, what are we going to do? We are going to draw our Fibonacci extension from here to here to know where market is going to react. Now let's turn off this market structure indicator so that we can get it clear. Now you use your Fibonacci trend based Fib extension, you click on it. Now you come to the bottom here, you click on it, you drag it upward from the higher high on top of the higher high, where that is where market range. You must draw it where market range, not the trend, where market range by before pushing upward, because the way they range for smaller time frame, and so it a range for bigger time frame. Now you draw it here, then you drag it down like triangle. You drag it down like triangle. Now this is 1 hour. This is 1 hour. This is how to draw your extension in 1 hour. Now this is 1 hour. As you see this in 1 hour now, this is where market react to. As you can see, market came to this place. It came to this place, this yellow place, 127.20% zone, react. If it's break above, come down to this zone, it retests the zone, then market started pushing upward. You see, here is a level, here is the first level. Then market also reacted at this blue. It came down to retest, but the momentum of the market high was high, so it didn't retest it very well. It continued upward, but immediately it got to this level, this 200.00%. market dropped down. You see, immediately market got to that level, market dropped down. And market dropped down. Now, see, this is how to plot out your sell. If market is in a trend like this, just know that market will react at the yellow, at the blue, then definitely it will reverse at the green as this 200%. And that was the trade we took last yesterday on Friday. That was that place that market sold from. This was the level that we took our trade from. Now, immediately market got to this level, what you should know that you should wait for a confirmation to sell. Now, if you are selling, you have to draw your Fibonacci retracement to know where market is going to get to, reverse and continue the uptrend. Now, because this is 1 hour, remember 1 hour is to catch a possible trade. All right, so now if for example you are buying from here, maybe you hit 300 pips, you take profit, you should wait for market to go above this yellow resistance, retest it for a continuation. Once market retest this yellow for then you enter buy for a continuation, you catch the second trade. What else you need to be waiting for is a pullback. Don't take more than two position on a buy trend, except market is ranging and you want to just and the market wasted a lot of time, so you have opportunity to buy again. But if market is in a straight uptrend, say you catch the first trade, you go to this yellow, you took your profit, you wait for the retest, you retest after, before you push again, you enter, then you push again to 300 pips again or 400 pips, you took your profit. What else you should be waiting for is a reversal. That is how to trade. Now let's put our retracement to see how market got to this place, reacted and started pushing upward again. Now let's remove this extension. Remember, this is 1 hour time frame. We are using it to catch possible trade. Now you put Fibonacci retracement. Now you have to measure it from the higher high to the lower low of this one. So this is the lower low. You see that when market was pulling back, market came to this 61.80% zone, reacted and started pushing upward. Anything will make market push past this 61%, push past this 78%, that is an indication that market is about to change the trend. Because if market push to 78.60% and market keep on pushing to this 100%, that signifies that market is approaching 38% on 4 hours time frame, and that is signifying a change of trend for a day trader, not a monthly and weekly swing traders. For a day trader, is changing trend. Now you see, after you draw your Fibonacci retracement, market came down to 61%, reacted and started pushing upward again. You see, at 61.80%. So this is how to catch a good trade. These are the levels. Once you see the market react to this place, you see market push up, came down to this place and started pushing upward. So this place now is a good place to take your trade. It's just that here market ranged here so much, so that was the reason why people didn't make a lot of money from this push. But this is a valid zone to take your trade. Now market started pushing up again. You see that market reversed at the swing zone and market started pushing up again. Now let's draw our extension regarding to this current move, because from this pullback to this uptrend that the market is making now is the current move of the market. So how will you catch the trade? How will you catch the next sell? Because the market has pushed so much. So how will you catch the pullback sell? What you do is draw your extension from here to here, from here to here, then you drag it. Make sure that you draw it well, because if you not draw well, any small mistake you make will make you make a bad choice that will cost you money. Now, okay, let me say on the market structure indicator, for you to see that I'm correct about where I drew my extension. I'm using this for a case study because I can support out my swing low. All right, see here now, this lower low here, where I draw my extension. You see, this is a swing low. This is the current swing low on 1 hour. Current swing low. Then this is where the market range from before pushing upward, where it reverse from before pushing upward. You see, that is a higher high. So that is where you put your full extension. This is the reason why I said that market has been projected to work in a systematic way, only if you understand. You see, so got here, then see, like this is it. So market has already started pushing. You see that market has already reacted here. So this was the pullback. After, see that buy I bought that early hour of Friday, the early hour of Friday. This was the buy that I took. Then the market came down again to retest, showing you that this here now is a zone. It broke the zone, it came down to retest, and market continue again to the blue resistance. This is where market close Friday at the blue resistance. So market is still going to push upward again to this 200%. So if market open on Monday, we have to be looking out for a buy trade to get to this 200%. Once it get to this 200%, which is 4270, around here we should be looking out for a pullback, a sell. So by Monday we should be looking out for a buy trade that will take us to this 200%. Then we have to enter the sell for a pullback, and we are going to be entering the sell to get to 50 fib of our Fibonacci zone. But since we are not going long for too much, we will just enter the trade to get to 38%. Then we call it a day. Then wait for the market to get to 50 fib or 61% for a continue buy trend. Now, this is how to use Fibonacci strategy. Using my order block as a proper confirmation. You see that when market push, using this one now for example, because all those ones I explained, you will not see all those order block, because the order block work with recent market move. Now, when market push that money, it created an order block to show you that that is where orders took in. This is 1 hour. So when market came down to this order block again, you see that the market push upward again. Because why now? This order block now is a zone. This order block now is a zone that aligns with a Fibonacci retracement, Fibonacci extension zone. So now, with these two aligning together, it will make my mind strong that market is actually going to push from here. All I will wait for is a confirmation for me to take my trade. So if market open on Monday now, I will wait for confirmation at this point, at this blue point. Then I will take my trade buy to this place before I'll enter pullback. Now, this is how to use it. Now, if market is pulling back on Monday, where I'm expecting market to reverse from is this order block below here. This one that has not been tested. This one, that is where I'm expecting market to reverse from. So if market enter here, I swear, that is a powerful and a good trade to take. Powerful and good trade. Market will not break this zone, because using your Fibonacci retracement, this is 50% Fibonacci zone. So here now market go reverse for this second order block zone. Now let's go to MetaTrader 5. Let me show you how to use my moving average for a confirmation to take my trade. Now let's go. Now this is good. This is good. Now this is 15 minutes time frame. This is 15 minutes time frame. Market range here, but you see, for example, you see, let me show you a proper confirmation. Let me show you a proper confirmation. And I will explain the reason why I will tell you that 15 minutes is the best to use. Now, let me use, I will just use the current push, the current move of the market, for example, a case study for you. So all here, market range all here. So I'm trying to use, well, let me just use the market range all here. Market range. Let's go to 5 minutes. Go to 5 minutes. Market range all here. Like that was the reason we didn't catch a good trade last week. Now, okay, see that buyer took that money. This buy here, I took this buy. This buy currently now, I took this buy. Market just opened and started pushing upward. So it opened and started pushing upward. Now, if market is coming down in a sell and it came down to your zone, market came down to your zone, it will range. It will range. Once market range, you have to wait for a confirmation for the candle to close, push above this Fibonacci, for the candle to push above this moving average, close there before you enter your trade. But this is 5 minutes. Once market push like this and close above the moving average, don't enter the trade. Don't enter the trade. The market will push up and came down, just like as you see here. Market push up. When the market push up, where it touch before coming down is a 15 minutes moving average. So market came down for a proper confirmation. So like that is the reason why it came down and started ranging again. So if you don't know now, you start like market want to trigger against me, you can start to the fear. But market is just getting ready for 15 minutes time frame to get ready. So the thing range. It was the next morning that 15 minutes time frame confirmed. Now let's go to 15 minutes time frame and see. This is the buy. The same buy. It pushed up, came down. This is where 15 minutes time frame confirmed. See this place. How am I going to show you guys now? How am I going to show you guys? How am I going to show you guys? This place, this bullish candle here, this was where 15 minutes time frame confirmed. So immediately you see confirmation like this on 15 minutes time frame, it closed above the moving average. Enter your trade. Enter your trade. So if you enter the trade, then you are good to go. Just like me now, I go 200 piece, I take my profit. If you measure from here, from your confirmation to this place, that market Skype to, is 250 pips. So that's why I go 200 pips, I take my profit, because market here now is a zone. Market got to this place and it started reacting. But that does not mean that market is going to come down, because why? Here now, just like I show you, this up here is a zone. Because if you see here now, up here is a zone. So market reacted at this place. At the same time here, market created zone here. Market created zone here, so that's why market reacted at this upside, came down to this place and continued the uptrend. So but at that time must have smashed your first TP at the day. You may wait for a confirmation here. Once you see the confirmation here, then the market close above the moving average of 15 minutes or 5 minutes. Rather, you can use 5 minutes for this one because that will make you not to use a big stop loss. You can just use 5 minutes confirmation for your continued trend. You just put your stop loss below. All right, so if you still measure from here to here, you will still catch a good trade and continue moving like that. So that is how to go. Just like here, market came to this place, reacted. See, like market came to this place, reacted, closed above the moving average, and immediately it closed above the next candle, skyped and continue pushing upward. So that is how to trade with this combination of strategy. You see, if market, now get this thing clear, if market is not in the zone, market can likely push below and above the moving average. If you close below the moving average, it does not mean sell. If you close above the moving average, it does not mean buy. This moving average only works, it is only valid when e dey zone, because once you push above the moving average, because why, once the market is moving, changing character, the moving average too will be curving, changing character at the same time. Once you close above am or below am, that is a sign to buy or sell. But if market no dey zone, that does not mean you should buy or sell when you close below and above. All right, so that is how to take a trade.